Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials up 4, Nasdaq's up 154, S&P's up 18. Let's get over to our man, Mr. Teddy Kekstadt at forex-trading-unlock.com. Teddy's website, folks, is forex-trading-unlock.com. Teddy Kekstadt, what's going on?
Good morning, guys. What an interesting way the markets have moved since last week when we talked after the election, huh? Right back when we started, basically.
It doesn't matter what currency you want to look at, man. We're up, down, and all over the place, right?
Major volatility in the currencies. Now, the kind of funny thing is, like, the yen, which I know is one of your favorite currencies, that buy signal that was triggered 2 days ago on Monday, the dollar index had a short-term buy signal. You had the euro US dollar that are now a little short-term bearish, US dollar Swiss, which is bullish, and then the US dollar yen. Now, you know how I always, reinforce the fact that when most currencies are trending one way against the dollar, the yen is usually the opposite.
Yes.
But US dollar strength, I think, in the short run. Now, we had the election, volatility of last week. And remember I mentioned remember when we talked last week, how the 30-year Treasury bond had over a $5 basis point move,
right,
between the election and Wednesday when we spoke last week. The 30 years back now on those lows, okay? Now, this is a big deal because the yield curve spread now is so stretched between the short terms and the 30-year. I mean, the market is commanding higher rates no matter what right now.
Yes.
And that's really evident with what happened, because last week was the spike of the news and the election, but now things have calmed down, and now that market has come all the way back. So meaning bond prices are going down, interest rates are going up. This is a big strength for the U.S. dollar in the short run because you need flight to quality somewhere. So if the Swiss is falling apart and the yen is falling apart and the 30-year is falling apart, where do you go?
Right.
You can only go to the dollar, So I'm not bullish the dollar overall, but it's really hard when you have the 30-year and the 10-year futures bashing new lows and extremely while the short-term curve is locked at its high. And I think that you're really going to start to see this stretching, because remember how we were talking about how we started to have divergence in the currencies at the end of the summer?
Yes.
Now we have where, there's always this attack on the dollar right now, especially because it's an election year. But the markets are so stressed now, not stretched, but stressed, that you need to have balancing. So you can't just constantly be battering the dollar when all these other markets are falling apart with indecision. And I think that, you had this big rally that happened with the stock market because of Pfizer and whatever, the interrelationship of equities, debt. I mean, look at what happened with gold too, with that sell-off.
Oh, that yen controls gold, man. I mean, if anything, you could see what happened. I mean,
right.
It's just
that's why I started with the yen. And I think that, what happened 2 days ago with that yen move and with the gold move, that's not just profit taking. That's an actual line in the sand for the short run, saying with all this volatility and the stretching of the divergence between these markets, those are solid. They planted their little spot for a short-term low or a short-term high.
Okay.
Now, you know what I'm saying? So I think that, before we were talking about how the certain markets made higher move highs and higher move lows simultaneously in a short time.
Yeah.
So that things puts us in a very neutral bias, and we have that because we don't have a decision on the election. We know that, with the coronavirus thing, I mean, one day they have a cure, one day they don't have a cure. I mean, like, this indecision, the market likes it for volatility, but there's no direction, And I think that until we have a solid, confirmation of who's the next president of the United States. I mean, remember, this is deja vu. This happened in 2020. Everything that's happened in the past week, Al Gore went through that same motion, So, and I think that you're really seeing that, like, the banks, they're really looking at this. You know what I mean? And you're just not going to get a big move. You're not going to get a lot of strength in the dollar, but it's going to be really hard to crush it. And look at what the lockdowns, like with the UK. the pound is going to have a really tough time at maintaining these highs that it's been trying to stress. Like I see it getting back down to $1.30. I see the euro getting back down to about $1.16.5, $1.16. You know what I mean? Now this is not a big move, but it's most likely going to start to hammer support and grind there. You know,
can we go back to the yen for a second? I really want to understand this yen. So when you say that, you know, I mean, this yen, folks, you know, I've seen this before, and what it does, if the yen goes weak and goes weak big, goes to the moon, it goes the other side. So when you say the line in the sand, now, is that, do you speculate, was that the government of Japan, was that just buyers that were coming in at that 103 flat out and just drove it? Because
I think so.
Yeah.
I
okay.
do.
Cool.
No,
that's
really
yeah.
do.
Right.
Yeah.
Right.
I don't see it as a volatility spike or short covering or anything like that.
No, I'm with you. But they just said I want to park my bread here. Right. Yeah. Right. It was
right. I think that's where they're saying like they don't want to see it get lower than that. I mean, remember, while the currencies have been volatile this year and basically trending only since March, the U.S. dollar yen has been in the bear market now for a very long time. You know, so I mean, I'm not calling for a bottom, but definitely for the short run, I think that there's a line in the sand that's been drawn.
Sure, no, I can see that. And what Teddy's saying, folks, what happens is that when that yen gets too strong, the Nikkei gets destroyed. So it'd be like our market's getting destroyed. And, you know, so they, you know, they're stepping in saying, hey, that's it, man, I'm done. Okay, cool.
It's counterintuitive for their own national sovereignty
big
when
time.
it comes to their finances.
Yeah,
absolutely.
big time. Interesting.
Exactly.
And then, of course, then you're going to have to really get us educated on these bond moves, too, because you can see that there's no doubt that bond move just smoked the technology stocks, man.
Right.
I mean, that was, you talk about divergence. If people weren't in the market for a while, man, how the heck is the Dow up 1,800 points and the NASDAQ 100 is down, right?
Correct.
Yeah.
Absolutely. So, and I think that's what we're seeing, you know, like we have 2020 obviously is a crazy year for everything. You know, predicting markets is tough, but I don't think you're going to see any major trending going on for the next couple of months. I think we're establishing a wide range trade.
Yeah.
And remember the euro US dollar, that was in a $4 range for over basically a year. You know, until 2020. And look at the action that it's had in 2020. It's moved around more in 2020 than it has in multiple years, you know. So, and I think that we're coming to this, I mean, we're going to know who's president by January, no matter what, you know. So, and then we have Brexit that's still going on in the middle of lockdowns, you know. So, and these things they're not off the table, but they're not really moving forward well, and that just leaves too much indecision. So I think range traders are going to have a really fun time over the next month and a half. Swing traders, I think you're going to have to be very careful about thinking that trends are going to evolve. I don't think trends are going to happen. You know, unless we see the interest rates really fall out of bed. I mean, could you imagine if the 30-year bond goes from 170 down to 150 while the euros are locked at their ceiling?
I listen, man. I think the next move in that 30 years, 167. I mean, it kind of broke everything. But you know, 167 is where we broke out of in February, I think, right? I mean, that's what we went topside. So it's like, okay, man. And what's so weird, of course, is that we're all used to lower for longer. And guess what? The market said you can be used to whatever you want, but guess what? No.
And you know what's going to start hitting the financial stocks too, like the banks and the exchange stocks. I mean, think about this. The CME, the Eurodollar product, not the currency, but the Eurodollar is one of their biggest volume contracts.
Yes.
It's not doing any business anymore. What's that going to do to their profits?
Oof.
You know, and the banks, that's going to affect the banks to trade the interest rates too.
Oh, I like it. Teddy,
we'll talk about that later.
You're awesome, man. Appreciate the education. You have a great week, safe week. We look forward to speaking to next Wednesday.
Great, guys.
Thanks,
Take care.
man.
Be safe.
Thanks, Teddy.
Stay right there, folks.